Welcome to the February 16th, 2026 advance report for McGowanGroup clients and networthradio.com listeners. Whoa, everything changed. Now, I would say that this is a lot like the end of 2021 into 2022, which was a bear market. I don't think it's going to be that bad, but money flows reversed hard. And I'm going to show you what's happened in the financial markets. This is the biggest shift in market leadership that I have seen in a long time. And this starts with the darling of the software industry, Palantir, right? The AI leader. They get all the government contracts, they're redoing all the agencies. Now, I don't know how deep this is going to go, but look at this. Minus 27% for Palantir, a leader so far this year. Last year, they could do no wrong, right? And they went to 250 times earnings, which seems a little bit overpriced. That's one reason you want to subscribe. By the way, thank you for tuning in. I'm Spencer McGowan, your financial weatherman, president, McGowanGroup Wealth Management. We serve affluent families right from the Crescent in Dallas, and we would love to help you update your plan for 2026. This money flow shift may have some people needing to update their plan because 27% down so far this year, that's bad. Now we look at Salesforce, the dominant software company, minus 30%. This is the AI fear trade. So Anthropic comes out with this new, if you will, AI that can write more code. It's better at writing code. So Anthropic announces this. This is kind of like the DeepSeek moment where the Chinese leapfrog ChatGPT and everybody thought it was the end and it sold off. But software companies, easier to duplicate what those software companies are doing. That's the fear. Now let's see how it works out in reality as the year progresses. So who's getting checks and who's writing checks? That's the other theme that we're going to cover here. So this is the top 10 year to date and the bottom 10 year to date. And then I'm going to give you some solutions, which we talked about last year and the year before and the year before that too. All right. SanDisk, 151%, right? Memory, they're getting checks. Western Digital up 60%. Wow. You've got Texas Pacific Land is in here, 49%. That's unrelated, but it does have to do something with the oil and gas industry, data centers, and the revenue from their nearly 1 million acres. Remember, it's not a recommendation for your portfolio till you actually come down and get a plan. Just because we talk about it doesn't mean you should go do it. Moderna, still up 46%, even after some controversy this week. Corning, fiber optics, you got to have 46% gain. And you've got to have fiber optics going into the data center. They're getting a lot of demand at this point. So Applied Materials, they're getting checks as well. Who is writing checks? AppLovin Corp looks like the AI could decimate them. Now this is curious. Robinhood down 33%, Trade Desk down 30%. There may be some thesis of automation for trading, but we don't have any confirmation of that yet. Where else was there pain? Well, the wealth management industry, right? Because if Anthropic or Gemini can actually write a better financial plan, well, maybe that could take some business. Notice a lot of this is an interpretation of what AI could do. Now, in this week's program at networthradio.com, Alex and I conclude the program by going over how are we using AI to improve research, right? How will it improve services? And what are the potential outcomes for the wealth management industry? The leading teams are going to utilize this to deliver even better service and hopefully better profits too. Whoa, here's the other spanking, the big surprise of the year. Bitcoin hit 126,000, now it's 60,000. That's a wow. And, well, it went to 60. Now it's bounced back up to about 68 or so at the end of the week. The crypto thesis has been completely blown apart. Notice the money flow. like the end of 2021. Tech and crypto could do no wrong, but this shifted quickly. And the irony is, a big part of the rally was about AI and blockchain too. And then all of a sudden, the disruption, lots of profit taking here. This is Polkadot. Polkadot went as low as $1.10. Up here, you see it at $5.39. That's painful. If you bought some of that and you had to tell your wife here, right at Valentine's Day, that'd be a painful conversation. Whoa. Anyway, crypto lost its luster. It's going to take a while to get it back. And the previous corrections have been around 80% from the peak. That's a long way away here. MicroStrategy. Here you see it at 457. Here you see it at 104. They're the Bitcoin treasury company that borrowed money and sold lots of stock to buy more Bitcoin. What they're trading at now is a valuation that is the 50 billion in Bitcoin they have minus the 15 billion in debt. So they're worth about 35 billion as opposed to being worth 100 and something billion. Wow, big money flow change. Well, where's that money going? Here is the NASDAQ year to date. It's a minus 2%, right? Technology in correction. And there's the fear, the AI fear, that all these companies are going to spend so much money on data centers that they're not going to make an actual profit for a while. And capital expenditures, who's writing checks? They're getting punished. Who's getting checks? Well, if I have a data center and I want to power it, right? Then I've got several choices. I could go nuclear, small modular reactor. We've got a couple of those candidates in the portfolio that are doing well, that help to build those things, that already do it and already make a profit doing it. And those are performing well. But the problem is you're not going to really get there until 2028, 29, 30. Some of these projects will take a long time to get all that approval. Well, the cheapest way and the fastest way to power your data center is to put a natural gas generator. Yay! Whoa! That explains why the S&P Oil and Gas Index is up 21%. In my opinion, that's one of the biggest sources of demand. But it removes a lot of, let's say, the latency in their earnings because they're getting more flow through the pipelines. Now, here we've got 15.61%. That's the total return from energy infrastructure, one of the funds that we have having a great year. Now, we still have some Microsoft. It's down 20%, right? But the oil and gas has made up for it, and we're having a good year. No guarantee of future performance, but these areas of diversification based on value, based on dividends, are helping us. The market shift is away from overpriced things without a dividend and moving to what we call deep value. And you'll hear that theme from us throughout the year as we search for deep value, even in the international markets, potentially the freight markets. We're still finding good bargains despite the rally. ExxonMobil up 25%. Now, how are earnings doing? We're just finishing up earnings season over the next week or two, and the S&P 500 over last year, this says things are fine. Sales growth, 8.94%. That is way over inflation, which came in at 0.2% for January, only 2.4% the trailing 12 months, and even core inflation at 2.5%, plus 130,000 net new jobs in January. Good environment. Earnings growth. So far, we've got 369 companies out of 500 reporting in the S&P. We've got 12% earnings growth over last year. And last year was a good year, and the year before that was. It's one of the more positive environments. But remember, we warned you a couple of weeks ago, bull markets die on euphoria. When everybody gets all excited and everybody's in, well, you'll find that once you get too overpriced, then the bull market is over, and we'll try to give you a read on that and adjust the portfolios with tactical safety. Thank you for tuning in. Find us at networthradio.com, and you can contact us there. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You could see our performance track record.